All right, back we go. Going to do some videos on the SPY today, NASDAQ, Dow Jones, see where we're at in the market. It is September 24th, Saturday, 2022, near an end of the month. All right, let's take a look at the SPY. Let's go back to the COVID high here. Right here, that was in March, when you got the news, and this thing dropped like a rock. And the SPY reached the low of 233.80, and then it took off. No one knows what something's going to do in the future in the market. We can take our best estimate, best guess. We didn't know it was going to go. Look at this, all the way from that bottom and just keep going to January, basically 2022. It was a tremendous run. You had a few pullbacks. You could see here, September, October. Nearing November, and then another little pullback October. But it was all a bull market right here. A bull market for that little 2-year run. I mean, a tremendous run. Now it's been a bull market since 2009, basically. What's this, 13 years? You could say 14 years, 2008, the crash, the financial crash. All right, here we go. So, this is what happened. Ukraine war happened. Supply chain, all kind of disruptions. Everything just got really weird in the world, America. Things just changed very fast. You had high prices in housing. Housing went up just like the market. It's like 2 times the worth of the house. Let's say a house was 300,000, it's 600,000. It's pretty crazy. Oil and gas were up high. Commodities, copper, all that stuff, you name it. Now, let's see where we're at. Excuse me. All right, we're in a downtrend. This is a bear market. People are like, oh, we're in a recession, bear market. It doesn't matter. It's a bear market. How's the market going to go down since January, and we're nearing October, almost 10 months, 9+ months, and you're going down, not going up. It's pretty simple. Anything to me after 3 months is major correction or bear market. All right, here's the highs here. You put a little circle here, circle here. These are all trend lines. We have one right here. And you can see, after the move January, this was the high. What was the high here? The high was 479.98. Pull back, get a bounce, down again, wash down and bounce, and there's your second high. So starting to form a trend line. We didn't know exactly what it's going to do back then. You look back, is this going to keep going up? And everything's all right, but things just started to collapse. And then really big drop in June. Look at that. We tried to have a little bounce here to 410 plus, then a waterfall drop. Look at this, gap. And this is the June low. This is everyone is looking at right now, 362.17. Nice run here in July, August. And you have a line here, 431.73. So here's the lines in the high. And this move here, this whole move, this is a broadening descending wedge. I mean, it's broadening out. See right here, the width was not huge. And now it's getting wider, wider, wider. That means you're going to have tremendous volatility, counter rallies, drops. And you can put the lows here too. Right here, there's a wick. Here's that big candle here. They're all connecting. There's the bottom wick right here. So the volatility is going to be, pretty amazing through end of this year and the next year. Because we don't know exactly where anything's going to go at this point, when the bottom is going to be in. And you can see right here, and this is a misprint on TC2000. It's not really here, and I didn't do that. All right, so here we are, 368.24. You can see the low right here was 362.17. So we're going to break that low? Yes, I think so. I think we're going right down. The next move should be down around 350, 345, 350. Now you could get a rally next week. A little bounce up to this 390, maybe 400. We'll see. We'll see how the market reacts. even if it does this, that will be my shorter term target, and we just go back down. And we'll go back down to that 350 area. And the 350 area is the 50% retracement level. If you look back, see this retracement from that COVID low to high. Here's a 61.8, which is 320. And then right here, you can see here is 350. That's on the 68. And the 38.2 is 380. 50% is 350. So, we're going down. This broadening wedge is getting wider and wider. I mean, we could come down, let's say this happens. We come down to 350, and then we get a major rally up to what would be the next high on this? So we've done almost 480, 460, 430. Well, if it keeps getting lower, it's not going to be 430. I would say maybe the high 420, 400 to 420, the next bounce. We'll see what happens right there. And we're oversold the market. You can see it right here on stochastics. Looks like a double bottom right here on stochastics. It touched, bounced up, and then came back down again. So that'll be interesting if we do get a little bounce next week before another move down. We'll watch for that. You can see this broadening wedge, and this is big. See on here when this was, you can put your lines different here. This was a wedge. That means it was going up so high, and it was running out of room to go up. It's like climbing a mountain. Eventually, you'll fall off a cliff. And that's what happened here. September, October, the precursor, and this happened January 2022. It's a rising wedge. This is a falling, not a falling wedge, but a broadening descending wedge. It means it's so wide now. You're getting so many rallies and then bounces, counter trend bounces, everything. See right here. Let's see, the real big ones. You had one here February that was pretty decent. March, June, and then June here, May, June, and then June, the really big one, then July, and then August. So in a bear market, you're going to get tremendous volatility, ups and downs. And right now, we're going right down here, and we'll see if we just keep going next week. Little, maybe even sideways for a move down or that move up. So that's what you're looking for now. Look for 350 immediate target, meaning that will be the next move if we break this June low, very close. Let's take a look at the weekly. Now the weekly, I have lines going all the way back to look at 1998. That was the high, the .com high. You bring that all the way up. What do you have? That is the ultimate high in the market where Ukraine war started. So that is the highest line we had now. And now the lowest line, you go back to the 2009 financial crisis right here. And that COVID wick down brings it here. I have another one. If you want to bring it a little bit tighter, which came up to 2016. And then 2020, the next little candle. That's on the weekly. And then if you go to the monthly, it becomes even clearer. You can go lines all the way back to, I think, like 1932. Everything connects. It's pretty amazing. So look at this. 1999, we go up. And there's the move down. A few years. There's like a year and a half, financial crisis. This was eventually a breakout of 1, 2, 3. In 2013, we broke out from the financial crisis and the .com bubble. And then we broke out and we just kept going. A little pullback along the way, 2016, 15, then 2019, and 2020, and here we are. So you have the high line right here. Middle line, if you want to put in a middle line, let me try to draw it right here. See that? So that pretty much touches 2008 and that COVID body right there. You can bring it up to the high candle wick. We can bring it a little bit lower to the full body of the candle. It brings it right in the middle. Right now, that's where we're at 368, a little bit above. That's the middle line. I think we're going to this lower line here. And you can see on the monthly, see here, 2009, that wick touches perfectly the COVID wick. And then you bring it closer, you have 2016, 2012, and then that candle right there touches, which was April 30th, 2020. Now we go down here. Where are we going? 350. I still think we're going ultimately 300, 320. If you get a really overshoot, things get really bad, housing, everything, jobs start to really collapse. I could see 260 to 280. That would be my really ultimate low, overshoot low. And then I'm looking for that 300 to 320. That'll be my immediate bottom, and we'll see how it plays out. So there, you can see this bending over. This is a pyramid. There's front side, back side. It's probably going to go all the way back down to the pyramid, which is COVID. That little wick here, that body here of the candle on the monthly. So you can see where, look at stochastics too. We're at 25.15. That is looks like the second lowest ever, going back the last 20 years since the dot-com bust. Dot-com bust, and the low was 1709. Then we, channeled back and forth near that 20 oversold level. The financial crisis looks like the lowest. It was at 9.02. That's incredible. Look at the volume too, 10.8 billion in volume. It's on the monthly chart. So are we going to go lower? I think we're going under 20. It tried to do a little fake out when we thought we are going to have a little bit of bounce there. It touched, look at that, touched the red line and white line, but of course didn't cross over, and we're going lower. Yeah, how far? We're going to go under 20 probably at this point, and then eventually bottom somewhere under 20. I'm not sure where, and then we'll eventually come up after this washes out. Don't know how long this is going to last. It's hard to say. Interest rates keep rising. The Fed is putting full gas. They want to stamp out inflation. We'll see how this plays out. And let's go to the quarterly. See the quarterly clearly. Look at that. The dot-com bust, 2008. Look at all them red candles on the quarterly. 3, 6 red candles. Pretty much all red here too. And then you had 2010, 11, a few little candles here, 2015. There's your 18, there's 20, and here we go here. And these are massive candles compared, even the 2008, 2000. You can see here, this is clearly on the quarterly. Look at your low here. Here's your high line. Here's your low line. Once you break 13 EMA, 20 EMA in the monthly, going down. Excuse me. So, there's 300. There's 280, 260. That will be my overshoot low. Anything below that would be pretty disastrous. So this bear market is going to continue. We've never had interest rates this high in 14 years. Free money. After COVID, handing people money, loans, PPA loans. I just read a story. It was like 45 billion in fraud in PPA loans, which is incredible. So free money has a cost, and now we're going to pay for it, all of us. This is going back down, and we'll see what happens here. So, but I still think 260, 280 would be overshoot low. 300 to 320 is what I'm calling for down there, and we'll see what happens there. All right, the yearly. This is a yearly chart. So you had 3 red candles in dot-com bust. 2008 was only one really red candle. You had one in 2011, 2015, 2018. And look at this candle. This is the biggest candle ever. This dwarfs these candles, even though they lasted longer. 2008 financial crisis and the dot-com crisis. Look at that. And you can see on this yearly. Now, this is another thing. Again, trading, day trading. See the 13 EMA. When this formed, it's not even barely formed on the chart. We were very far above. Financial crisis wasn't as bad. Look at this. 13 EMA on the yearly is so far behind. It's 278. That means we overshot so much. We just kept going straight up. It's like climbing that mountain, Mount Everest. You're so far above everything. Look at this. 13 EMA is way down here. So that's in any kind of trading, when you get far away from that 13 EMA that far, that's a problem. It means it's got to come back in. We overshot. And you see the 20 EMA. These stochastics here crossed up and down. Financial crisis. Then this was the highest level ever. It looks like it was 99.83. This might go down in history, the highest ever. That was December 31st, 2021. We were 99.34 on stochastics. Incredible. And now we actually crossed down. So how far down is this going to go on the yearly? It's hard to say. All right, so that's where we are on all the different charts here. Let me bring this back in here. So this right here, you draw your lines. This is a misprint again. I hate when that happens in TC2000, total misprint. All right, so on the daily, you can see here when we were wide here, then we started to go right here, then the high from this low got higher, battling back and forth, held pretty good and went up. On this, we had that little overshoot in September, then really dropped again. So it looks like one of these moves again, up here and back down here to form a new low. I think it should come in right around that 50% retracement, 350. That'll make a lot of sense. You know, even looking back, COVID high was just below that. It was at 340. So maybe the next low will be 340. And then we get a shot up, big rally, November, December. You know, a lot of rallies happen end of the year, Christmas. Yeah, they're going to put on massive pumps, all these hedge funds, money managers, anything to make money. So look, if we get drop here October, we keep going, November, December, we rally up to 400, 410, you know, maybe 420 if it's really strong. Excuse me. So that'll be my call there. All right, so there's the SPY. We're continuing in the downtrend. How long will this last? Who knows? Looks like in the next year. You know, this is getting wider and wider, which is unbelievable. That's when if we go here and then bounce to say to 380, next move down, next year 320. Yeah, we're just in the downtrend. So eventually we'll break out of this. I don't know how long. As long as this keeps going, it keeps going. Now, if you look at the length here, the length of this, the COVID. Yeah, the COVID low, what was it, 220? About 220 right here on that 100% retracement. Is this going to come all the way down to 220? That would be a really bad recession. There would be a full pyramid up, top of the pyramid, we go all the way back down. So all these gains lost, and we come all the way back down. I'm not sure if we're going that low. You know, it remains to be seen. You have to play this day by day, week by week, how stories develop, news develops, the economy. You know, right now the overall economy, see a lot of stuff coming down. Oil, gas is coming down. Food prices, I don't think are coming down that much. Housing's coming down. A lot of houses can't be sold now. The price is coming down tremendously. So we'll see what happens. The war in Ukraine is still going on. You know, Europe's looking bad. There's a lot of things going on here. You can make money in these markets. Wait for you know, downtrends like this. This is the next point. Is it going to continue lower or bounce to the next low? We'll see here. That's how you play these. That broadening wedge is pretty nasty, man. This is getting wider and wider. All right, that's it. So looking for SPY to either get a small bounce next week and then before the next leg down, or, you know, continue this flat sort of sideways. Then we go to the next move down, which is about 340, 350. So we'll see what happens on this. The SPY. All right, that's it. Please subscribe to Mike Gannon Trade Alerts on YouTube. Smash the like button. Check out any links below. This is TC2000, which I'm using. Any affiliate links, you can check it out in my links below. Instagram, Twitter, what else? Facebook. I don't use that much. TikTok, StockTwits, all in links below if you want to check it out. That's it for now. Peace.